Welcome back, my friends. There have been ongoing developments in the cryptocurrency market. So I am updating you more often on this subject because it is a rapidly changing situation. Crypto.com laid off 20% of its workforce. Our ambitious growth was unable to withstand the collapse of FTX, said CEO Chris Marszalek. Marszalek said the layoffs are part of a continued focus on financial prudence. This move comes just after Coinbase cut a fifth of its workforce following an 18% layoff in June. Unscrupulous actors have brought pressure on the crypto industry, said Coinbase CEO Brian Armstrong. Of course, he was referring to bankrupt exchange FTX and its founder, Sam Bankman-Fried. The FTX collapse and the resulting contagion has created a black eye for the industry, Armstrong said. And there's likely more shoes to drop, Armstrong continued. As you probably know if you follow this channel, cryptocurrency exchange FTX filed for bankruptcy in November. And the fallout from the FTX bankruptcy has sent shockwaves through the cryptocurrency world. And the FTX bankruptcy is casting a shadow of doubt over the entire cryptocurrency world. Crypto.com and Coinbase are now caught up in the contagion. And so is the leading cryptocurrency, Bitcoin. Wall Street investors are fearing contagion from FTX collapse. The crash in cryptocurrency prices shows no signs of slowing. But where will it stop? What is the real value of Bitcoin, Ethereum, and other cryptocurrencies? What does this mean for the US economy? And what does this mean for the future of the United States? But before we get into all of that, please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Crypto.com announced Friday that it's laying off 20% of its workforce. CEO Chris Marszalek announced the layoff to employees in a blog post. Crypto.com grew ambitiously over the past couple of years. But it has been unable to weather the collapse of FTX. Sam Bankman-Fried's crypto empire FTX collapsed in November. And he is now accused of fraud. Crypto.com is just the latest cryptocurrency company to announce layoffs. All impacted personnel have already been notified, Marszalek said in a post. Crypto.com currently has 2,450 employees. That would mean that about 490 employees were laid off. A Crypto.com spokesperson was not immediately available to comment. Basically all crypto exchanges and lenders have been forced to aggressively cut employees. The downdraft was accelerated by the FTX collapse. And by the wave of cryptocurrency-related crises that have followed the FTX bankruptcy. The layoff is part of Crypto.com's continued focus on prudent financial management, Marszalek said. Like FTX, Crypto.com agreed to some high-profile promotion deals. For example, Crypto.com acquired the naming rights for the former Staples Center a year ago. That sports arena is located in downtown in Los Angeles. That was a $700 million deal. That was an eye-popping number for a naming rights deal for the former Staples Center. Crypto.com Arena is home to the NBA's Los Angeles Lakers. We have a significant year ahead of us as we continue to help restore trust in our industry, Marszalek wrote. Marszalek founded Crypto.com in 2016. Crypto.com is based in Singapore. It is widely believed that the company reached at least $1.2 billion in revenue by 2021. Crypto.com had a disastrous 2022. There were high-profile gaffes, like multiple mistaken transfers. One huge mistake accidentally transferred over $400 million worth of cryptocurrency to another exchange. Crypto.com also laid off some employees in 2022. At the time, Marszalek dismissed concerns about Crypto.com's stability. Startups are hard. But there is no better way to live, said Marszalek. Crypto.com is hardly the only cryptocurrency company experiencing trouble. Earlier this week, Coinbase cut about a fifth of its workforce. Coinbase, which had roughly 4,700 employees as of the end of September, already slashed 18% of its workforce in June, citing a need to manage costs and growing too quickly during the bull market. Cryptocurrency markets have been rocked in recent months following the collapse of one of the industry's biggest players, FTX. Armstrong pointed to fallout from unscrupulous actors in the industry, referring to FTX and its founder, Sam Bankman-Fried. The FTX collapse and the resulting contagion has created a black eye for the industry, he said. He added that there's likely more shoes to drop. We may not have seen the last of it. There will be increased scrutiny on various companies in the space to make sure that they're following the rules, Armstrong said. Long term, that's a good thing. But short term, there's still a lot of market fear, Armstrong also said. Cryptocurrencies have suffered alongside technology stocks. Investors are fleeing riskier assets amid a broader economic downturn. Bitcoin is down 58% in the past year. Coinbase shares are off by more than 83%. Coinbase joins a chorus of other tech companies cutting jobs. Tech and cryptocurrency companies hired aggressively during the pandemic. Last week, Amazon said it would cut 18,000 jobs. Salesforce reduced its headcount by more than 7,000, or 10%. Elon Musk slashed about half of Twitter's workforce after taking the helm as CEO last year. And Meta cut more than 11,000 jobs, or 13%. Crypto companies Genesis, Gemini and Kraken have also reduced their workforces. Every company in Silicon Valley felt like we were just focused on growth, Armstrong said. Companies were almost using their headcount number as a symbol of how much progress they were making, Armstrong continued. The focus now is on operational efficiency, said Armstrong. There seems to be a domino effect of bankruptcies in the cryptocurrency space. Trading volume has fallen off a cliff. Armstrong was steadfast in arguing that the industry isn't going away. He said the demise of FTX would ultimately benefit Coinbase. Coinbase shares are now at their lowest point since Coinbase went public in April 2021. The value of Bitcoin also continues to fall. Investors are clearly worried about contagion from FTX's stunning collapse last week. Prior to FTX's bankruptcy, the market was in the midst of a crypto winter. Bitcoin and Ethereum were falling in value and had enforced a number of crypto companies into bankruptcy. In its Q3 earnings call, Coinbase reported a revenue plunge of more than 50% in Q3 as compared to Q3 of last year. Coinbase also reported a loss of $545 million in Q3 alone. Back in June, Coinbase cut 18% of its employees. Wall Street reacted with a violent sell-off. There are many cryptocurrency collapses ahead. It looks like the sudden failure of FTX and its sister hedge fund Alameda Research are causing a domino effect of failures. Many trading firms will be wiped out and shut down. Many other companies that have assets tied to FTX are now seeking to raise funds on an emergency basis. But, as I am sure you know by now, not everyone believes in the future of cryptocurrency. Most notably, New York University professor Nouriel Roubini. Crypto and some of its major players as an ecosystem that is totally corrupt, said economist Nouriel Roubini. The lesson of the last few weeks is these people should be out of here, Roubini added. Binance CEO Changpeng Zhao declined to comment in response. Recent turbulence in the crypto market has resulted from highly risky crypto investments. That also includes unsustainable borrowing and lending by crypto companies and related investment funds. Bitcoin is consistently trading below $17,000 for the first time since 2020. Many experts are fearing that the contagion could spread to topple other major players. I can't believe that CZ and Binance have a license to operate in the UAE, said Roubini. CEO Changpeng Zhao is banned in the United Kingdom. He is under investigation by U.S. Justice Department for money laundering, said Roubini. The regulators should be thinking carefully, he said. He is a walking time bomb. The Binance CEO received a financial services permission from Abu Dhabi's Financial Services Regulatory Authority. Dubai, the commercial capital of the United Arab Emirates, granted the crypto exchange its green light earlier in the year. The United Arab Emirates has implemented a number of reforms and frameworks to become a crypto hub. In this way, the UAE seems to be tacking opposite to other countries and governments as they ring the bell and sound the alarm over the industry's risks. Different countries have taken varying approaches toward oversight of crypto firms. The cryptocurrency industry has ballooned in size over the past few years. Changpeng Zhao has led Binance to getting regulatory approval in both Dubai and Abu Dhabi. And, Binance has also won regulatory approval in France, its first major European jurisdiction. Just this past week, Binance gained further approval in Abu Dhabi to provide custody services to professional clients. But, Binance is banned in the United Kingdom and was forced to limit its activities in Singapore. Bitcoin sunk to just under $16,000 for the first time in recent memory. That price has not been seen since November 2020. If you recall, Bitcoin peaked at an all-time high of $68,982.20 1 year ago. Warren Buffett, CEO of Berkshire Hathaway, has repeatedly said that cryptocurrencies are worthless and have no intrinsic value. Buffett says that cryptocurrencies have no value in the economy or to society. He clearly thinks that the current crypto winter is a prelude to the eventual death of cryptocurrencies. In January, few people would have predicted that this crash would happen. Regular people who never even traded stock were suddenly active in crypto trading. Cryptocurrency, by its very nature, is ungoverned and unsponsored by any country. There are no banks involved in the system and there are no regulations. But, what do you think? Please hit the like button and leave a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.